Thanks for y'all's patience. All right, it says that we're live, so I'll make you the host again. And Jenna, you want those privileges or should I give it to someone else?
I'm happy to do it. Sid, do you want to have it this time since I wanted to do it for my own presentation, but.
Okay, I think we're still talking, but I can present it.
Okay.
Perfect.
There you go.
You are officially the host, Sid.
Thank you. I will just bring up the presentation and share my screen. So the next session is about planning for the future. As before the break, we were talking about, it means that now we are swimming in the ocean and now we need to watch out for all the perils in the ocean and how we can be watchful with that. And here you go, that. 2, 3. Can you see my screen now?
Yes.
We sure can. Before you get started, Sid, I'm going to just let those who just joined, if you want to know what you missed in the first session, I encourage you to scroll back through those comments. There are some good highlighted points throughout. I'm still on cloud 9 about this analogy about the break-even point, or that tip that was so helpful. But just so you know, that's a place you can catch up. Let's go ahead and dive into the second part.
I have eyes on the Facebook Live also, so I know what the people on Facebook are seeing, so I can. So with this, I'd like to transition over to Michael, IJ, and Grayson, who would be leading this next session.
Well, welcome everyone. So glad you joined and glad to be with you all today. We just finished an hour-long session, mostly on accounting and different types of cost and revenue. And then now this hour is going to be on planning for the future of your business and covering a variety of points there. So we, as the slide says, we're going to first start talking about capital and different sources of capital. What is capital? Essentially, capital is what you need either to get your business off the ground or maybe expand your business, take your business into the future. Certainly when all of you entrepreneurs have thought through this, and you've probably explored multiple of these potential sources of capital, and hopefully been successful in that. As you know, as we talked about the last session, getting some of these costs are, a basis for your business. If you're have a brewery like Grayson does, then you need a tap room for your customers to come in. You need the equipment in order to brew the equipment. You can't make sales until you have some of those things in place, and you can apply the different types of those costs to your business. So you need to raise that. You need to get that amount of capital in order to get your business off the ground. I know the Academy encourages entrepreneurs to start small. So, maybe if maybe there's an incremental step before you get a physical space where you can do catering, or you could you start growing some revenue in order to fund your growth. And there's various strategies along the way to do that. But in order to raise capital, there's various things, and the first one is really I'd say, along with this friends and family bullet, is yourself. So you may have savings that you've accumulated along the way from your current job before you struck out to be an entrepreneur. You may be perhaps doing some of both. Maybe you have a steady job that helps fund your personal expenses, but you're also able to save some of that in order to have the capital you need to invest in your entrepreneurial business as you get it off the ground. Certainly, the amount of savings that you have certainly helps you get started. quicker and do more quickly to get some of these basic costs established, so you can earn revenue. And also, maybe you've already started your business, and we talked about some of the costs and the difference between how much you make and your cost is your profit. Maybe some of that profit goes back into savings into the business. You've got choices to make on how you use that amount if you're fortunate enough to have some margin early on, and hopefully you're able to do that, which will help you grow the business better. So all that is essentially from yourself, because otherwise that profit would go into your pocket, which you may choose to do as well. And then the other sources, friends and family. There's people who really want you to succeed, and you perhaps are able to get some funding from those folks. With the risk being that there's a personal relationship there that you want to remain in place, and if the business is not successful, that could have an impact on that relationship. So there's some risk going down that route. And then there's the traditional funding sources, primarily banks, which comes with some interest. You'll likely have to put up some collateral, and have a payment plan to pay them back on a monthly basis. But certainly a good funding source, very reliable funding source there to get your business off the ground. And then there's other non-traditional investors that like Cabbage.com and perhaps crowdfunding, that also are ways you can get capital in order to get your business off the ground. Many of those come with a higher interest rate, but those are potential sources. Some of these are dependent upon your credit as well. So there's some things that may be available to you. All of these could be available to you if you have good credit. If you don't have good credit, some of these may not be available to you, or come with a higher interest rate. And then there's also investors, and investors, they are willing to help you get funding to get your business off the ground, but it comes with oftentimes some level of equity. In other words, they own part of your business, and the more owners you have, the more input that they'll want to have. And then also you potentially lose some control, and there's also some level of return that they'll want on that investment over time that you'll have to consider. But certainly a potential source of funding, and it also could come with some wisdom. Perhaps these people are people who've started their own business, been successful, and can help guide you along the way. So those are all various sources of funding. There may be others out of it that you all have tried, but those are some traditional ones. But I would say with all of these sources, you're really asking people to trust you, that you've got a good idea, you've got a good vision, a good passion for that vision, that you're willing to work hard to make it work, that you've got a business plan, and that you're going to be successful in this business, and that not only you're going to be successful, but you're going to pay that money back. You're going to help your investors be successful along with you. So you're really selling trust to some degree by raising capital. Certainly, you're selling trust when you have customers that they'll trust you to do a great job, that they'll want to come back. But the same thing with these investors. You're asking them to trust you. And so the more you're able to put together a descriptive business plan, such as we talked about some of that last session, but that shows, that what your costs are, what your fixed costs are, what your variable costs are. And this is here's the reason that we're pricing this as we are. It covers this cost. It covers, it covers fixed costs. There's a certain level of volume that you think you'll be able to get to, and here's why we have to get to it. And you're able to be, over this amount of time, I think we're able to be profitable. And I'm going, we're able to return some of that investment to you over this period of time. The more that they understand that you have kind of a command over that, the more people are willing to invest in you and your business. So all those things are very important to be able to raise the capital. And then also part of that business plan should be, as you receive cash, you receive revenue, how are you able to, what percentage are you investing that back into your business? Why, where are you putting it towards? And so to be able to draw that all out on paper, a plan, part of its budget, is important for the execution of your business, as well as to get others to kind of see that vision, to see that you've got a plan, to see that you're following your plan, and to be able to raise the money that you need. Grayson, any input here based on getting your business off the ground that might give some good practical examples?
I mean, I think you kind of nailed it. I mean, it's a cost benefit analysis on the different versions. A loan, when you pay back a loan, you're done with it. You don't have to deal with it anymore. An investor is a lot harder to pay back because they're joining with you for the long haul. But if the business goes under, during the liquidation process, you pay back the investor's prorated portion of ownership, but you're not on the hook for the original investment. So from that perspective, it's safer. But like I said, pros and cons. And yeah, I think the main thing here is just kind of looking, always be future looking. You can't sell a percentage of ownership twice. So if you're looking at doing multiple stages down the road, you may want to keep that in the back pocket. You also need to think about what's going to happen if you ever own less than 51% of your business. Plenty of people do that. Most large businesses, their founders do not own half the company. But from a small business perspective, that leads to a big time loss of control. I think on the next,
we're ready to move on to the residential side.
Yeah, for this one, this is a big area for keeping things going. And Sid, I liked your analogy of we're swimming now, but we're trying to avoid the crashing waves of the ocean. And I think that's pretty appropriate when talking about this topic here. And I'll give a little story of how my brewery opened. So we are located in East Nashville, Crazy Gnome, if you may have heard of us. But when we did everything we could to decrease our opening costs. We bought used equipment. We bought things at auctions. It took us a long time to build out the building because we did a lot of the work ourselves. And finally, it was also a lot of legal stuff when you're making a controlled substance like alcohol. You have a lot of governmental checklists you have to get through. Finally, after about 9 months after we signed the lease on the building, before we were able to legally produce alcohol, that we brewed our first beer the last day of February in 2020. And on March 3rd, 2020, our building, along with most of the rest of East Nashville, was hit by a tornado before we had even opened our doors to the public. It was catastrophic. We lost all of our brewing equipment. We lost entire walls. Luckily, the tornado hit at night and nobody was there. So we had no loss of life, which is the most important thing. That's not replaceable. But it just goes to show that, you know, you always say, oh, these disasters will never happen to me. But if, you know, if that's your attitude, well, if that was my attitude, I wouldn't be here. You know, I mean, we would not have been able to have afforded to build back again without insurance. Luckily, insurance covered everything, but you know, the point is, you know, I was meeting with an agent before and after the build out process to kind of break down what our business was worth and what our coverage was, and that alone is why we're still here slinging beers today. No other reason. We would not have been able to come back. And you know, that's a pretty drastic example. I really hope none of you are hit by a tornado, but you know, plenty of businesses get broken into, plenty of trucks get flat tires, plenty of bad things happen, and those are everything that the longer you're in business, the more likely something like that is going to happen to you, either on a big time scale or a small time scale. And so when we're talking about risk management, we're talking about, you know, what could go wrong is what is the tagline, and what can you do to protect your business? Insurance is the obvious number one protection, but it goes smaller than that too. Insurance is great, but it only goes into effect after something has already gone wrong. Is there anything that you can do to protect things from going wrong in the first place? So for example, for us, another risk that we have is, well, we've got a few different bartenders, and you know, if one of them gets disgruntled, they could, you know, decide to do something, you know, to the business that we wouldn't like. So how do we control who has access to the building? How do we keep it locked up? How do we manage cash? You know, those are what could go wrong. Someone could steal from you. Then the risk management portion is, well, how do you fix that? You know, do you buy a second safe that only certain people have access to? Do you keep replacing keys? Do you have code combinations for things? This is very specific to your business, and kind of thinking about, you know, going back to the break-even conversation, like what are your costs? Well, you also have to do the same thing on what are your risks? These aren't real costs because they haven't happened yet, but they could happen in the future. And like, what small steps could you take today to prevent things from going forward? And you know, a healthy practice of this practice starts small. It starts small with your small business today, and it goes on no matter how big it gets. When you do, when your business is so big that you're on the stock market, you'll be hiring companies like EY to evaluate your controls and how you've dealt with risk. That's actually something that all giant companies have to do, and their risks are crazy high level and very complicated. And when you get to that point, you know, you got a lot of other people doing that stuff for you. But whether it's how do you lock your door and how do you control how your employees have access, to how do you know your financials are being provided to you correctly by your accountant, you know, that's a way further down the road situation. Every step of your growth, you need to be thinking, the question in your head is, okay, now that I'm here, what could go wrong? And think about each stage of your business. What could go wrong? What am I doing to protect it? Insurance is a great one for a lot of the broad things. Our brewery even has an insurance policy over cyber security. Like if our website gets hacked or something, it's very cheap because it's never going to happen to, like, what are they going to do to my website? I don't know. But we've got the insurance. So if they do it somehow, then, you know, we'll get it. But, you know, think of everything, you know, and just kind of like analyzing your business step by step, you know, what are the things that are important? What does our business need to operate? And how could those things be impacted?
Grayson, I think one of the things that'd be nice if you touched on, because it's applicable to almost all businesses, is what do you do if you are unable to create your product or offer your service for a period of time, similar to whenever you were unable to brew the last March due to roofing issues.
Yeah, that's happened to me. We've had loss of operations on 2 separate occasions. So that's a great question, and there are 2 answers to it. One is insurance, actually. So you always hear like, oh, be careful about filing claims with your personal insurance. Like, oh, if you file a claim with your auto insurance, your rates go sky high the next year. Commercial insurance is a little different. It's more acceptable to file a claim, and a lot of policies offer something called loss of business income. And we have filed for that on 2 separate occasions when we've had a natural disaster impact our operations. And so the insurance company actually helped us by giving a portion of what we would have already made in that period, but couldn't due to a disaster. It's kind of crazy that you can have insurance that works like that, but most all businesses, and yours should, have a policy that includes that. It was definitely a saving grace, because that could be the difference between you making rent and not making rent. The other aspect, oh yeah, go ahead.
No, I want to just name that several or majority of our entrepreneurs don't have a brick and mortar. And oftentimes we feel as small entrepreneurs, because like, oh, I'm just a service provider. Like I personally am a speaker, or I don't have a brick and mortar yet, so I'm not going to worry about insurance. What is your response to that?
Well, I think that's taken the attitude of, oh, this will never happen to me. And as
the important thing to note is the different types of insurance available. It's all not the protection of physical property, but there is also the protection, to Grayson's point, his loss of revenue insurance is separate from kind of the physical insurance on the protection of his assets.
Exactly right.
Yeah, I also want to just add 3 words here in the topic of risk management. Insurance is one way to transfer your risk, but then as entrepreneurs, I believe sometimes that there's something called as risk appetite. You may choose that I don't want to spend on that, but then that counts under your risk appetite. And there is a certain amount of appetite you may have for risk. And then you need to judge that. What is your appetite? How far are you going to tolerate that risk without these kind of measures of transferring them to an insurance? And there has to be a threshold where you're going to say, beyond that, I'm not going to tolerate it. And I have to put safeguards against that. So I think you will have to measure the appetite, tolerance, and unacceptable limits to your businesses. And if you have determined that threshold, that beyond this it's unacceptable, that's where you have to transfer that risk using an insurance or a different mechanism. Over to you, Grace.
Yeah, so that's a good point. And I was definitely going to talk about that a little bit. I mean, okay, so you don't have a brick and mortar, you just perform services. I mean, I think when you're thinking about terms of insurance, or other safeguards that you can take, you're thinking about when we say what could go wrong. Well, if you don't have a brick and mortar, then a tornado hitting your building is not something that could go wrong. So it starts with that analysis. So if your business is entirely based around speaking, there are certain things that can go wrong. Like what would you do if you couldn't, like if you got a bad cold and couldn't speak well for a couple months? What happens in those cases? So in that case, maybe your insurance is more of a loss of income and not necessarily safeguarding personal assets. If you were to look at my brewery's insurance coverage, you would see several pages of different policies. The cyber policy is completely unrelated to the physical rebuilding protection that I have over the physical goods that I have. I've got protection over the building, and I have separate protection over the equipment that's in the building. If you don't have those things, then that's not even in your equation. So it definitely starts with that identification process, what could go wrong. But Sid's absolutely right. Then you have to think about what's my risk appetite, or how much do I care? You could go crazy going into the absurd level of details here if you think about the number of answers that there could be to what could go wrong, you would never be able to get to the end of all those answers, right? There are so many things that can go wrong, and some of them are just not that big of a deal. You could just call it a cost of doing business. I mean, am I going to start changing the locks every week? Oh, that's crazy. At a certain point, I have to have some level of trust, or at a certain point, I'm just accepting a certain level of risk that people besides myself have access to my building. I have to accept that because it's a cost benefit. The risk appetite portion is saying, okay, what could go wrong and how much would it cost to fix it? If you're going to spend, $10 to avoid a $5 loss, well, that's silly. Just take the $5 loss. But where it's cost effective, and in these, disastrous situations, it can be, make sure you're, thinking about the big ticket items. Does that answer your question?
It does.
And then, in addition to insurance and some of the physical controls we've talked about here the last couple of minutes, related to your financials, there are a couple of things we recommend for small business entrepreneurs. The most basic being bank reconciliations. Essentially, when you get your bank statement every month, and hopefully, as Grayson talked about the pluses and minuses, the advantages of having a separate business account, you're able to understand what each of those line items are, match it up to the records that you have. Hopefully you're keeping records of your expenses on your own personal books, to be able to validate that everything, it not only validates the bank's doing everything right, which, the chances are they are, but also that you're recording everything the way you should be recording it. And there's no expenses that you don't know about, or didn't anticipate. And, that matches up hopefully to your budget as well. So that's a basic safeguard for your business. Anything else, team, that kind of falls along those lines, a little bit less physical?
Yeah,
related.
Michael, that did make me think of some of the legal obstacles that you can face, that may not be as tangible. What could somebody, and so when you think about what could go wrong, maybe a different way to ask that question is, why would somebody maybe sue you? You may not have a brick and mortar, but if you're performing a service, what happens if you're doing landscaping and one of your clients has this rare 100-year-old rose bush and something happens and you cut down that rose bush? I don't know what could happen, or what happens if something breaks and injures somebody that you're performing a service for. In addition, that's definitely something that, could be insurance, but it could also be how you need to set up your business from a financial perspective. So Michael was just also reminding us how important it is to keep our bank account separate, which we have been talking about. And there's another, thing to think about as your business grows. A lot of people, including entrepreneurs with a single business in mind, with a single owner in mind, will set their business up as an LLC. And that's a really good way to ensure that if you were to be sued for something you were doing as a part of your business, the worst case scenario is that everything related to your business is taken away. But with being organized as an LLC and treating that LLC as if it's its own instance, AKA separate bank account. You're not mixing things. No personal charges on the bank, on the business card, no business charges on the personal card. Keeping them separate and organizing it as an LLC. In that case, if you were to get sued, if something bad happened in that scenario, they couldn't take your car. They couldn't take your personal car. They couldn't take your personal house. You would only lose what you put into the business. That's your worst case scenario, which is like, it's a sort of scary thing to think about, but we do have to think about these things when we start entering into the business world.
So I have a couple of things there. One, and you can tell me if this is like a healthy way of operating. I also know it might be the case for a couple of other people in the room, like Jasmine, who's also a speaker. But many of these things that I could likely be sued for as a speaker are negotiated in my actual contract. So that there's just a buffer for me of like, if I can't show up for whatever reasons, you're not expecting me, like you're not going to sue me for quote unquote ruining your event or, you know, what have you. So one, I want to say like an additional buffer when we think of guarding, protecting our work is contracts. And again, correct me if I'm wrong. Something else that I just wanted to name for our friends, our entrepreneurs who came in for the second session, if you do have questions, I know we only have 20 minutes left, but I want to ensure that you get the information you need. So if you have questions about cash flow, breaking even, bottom line, variable cost, any of that, feel free to ask those questions too, because maybe it did or did not come up in the first portion. All right, sorry, y'all.
No, that's a good point. And yeah, definitely keep asking any questions in the chat or over the mic. We're not too big of a group, so we can definitely talk about any questions you guys have. And you brought up a great point. You know, it's not just insurance. It's not just, but there are multiple ways to address risk. And when we're talking about, yeah, some of these more legal troubles, contracts are a fantastic starting point. And that can be, you know, you can have a contract that stipulates quite a lot of things. And so, okay, someone asked, where would I go for commercial or business insurance? Okay, so me personally, I went through what's called a independent insurance broker. This is somebody who works, so this particular firm in Nashville works a lot with anyone who touches alcohol. And they were able to understand my needs, understand my situation, and then they fielded quotes from multiple insurance companies. And my personal insurance is actually Cincinnati Insurance Company. I don't know why Cincinnati was the best match and why there wasn't a Nashville insurance company that was better, but from everything that we saw, you know, this independent insurance broker was able to connect me with an insurance company from Cincinnati that just happens to have a lot of brewery clients, and they just understand the brewing industry quite a bit. So obviously it's a very specific answer to me. One thing I would do, you know, this kind of goes back to your personal network. When you meet people from your industry, you know, ask them who their insurance broker is. How did they find their insurance? It's so industry specific because the risks are so industry specific. If you don't get the right company that understands how to insure your industry, then the coverage might not match what could potentially happen to you. And so that's, you could either be over or under paying for insurance, and, you know, it might not cover your risks in a one-to-one way. So yeah, I mean, if there's anybody in the manufacturing or restaurant or any of those industries, I would reach out to Paul Steele as he's my broker. He's great, and he could find that. We have an estimate for how much might spend each month. Okay, so I don't mind talking about numbers. I'm a small craft brewery, but this is going to vary so much, but I spend $6,000 a year on insurance. And but you have to understand, I'm manufacturing a controlled substance. I'm dealing with alcohol. I have basically a bar attached to myself. I've got a general liability clause as well as clauses on what would happen if I manufactured something that made someone sick. I've got a lot of insurance, and I will say I am thankful. I'm not going to go into too many details, but my claim after the tornado was in the hundreds of thousands of dollars. That $6,000 feels like a drop in the bucket now. It was so important. I have to imagine that I'm probably on the high range of what you would expect to pay, just given the risky nature of my business. There's a lot that can go wrong. Given that I'm literally making a poison that people like to consume. So as far as estimates go, classic rule of thumb, right? Get 3 quotes and make sure, don't ever settle for the first quote. Get 3 quotes from 3 different companies, more if you can, and go through an independent broker if you can. The independent broker helped me a lot with my, the independent broker helped me not only find my insurance, but when I had a claim, they helped me get through the claim process well. They sort of acted as an advocate on my behalf because I don't really know a whole lot about the insurance process. So he helped, say the right things to the insurance company and help me get a fair shake. So when I was going through that disaster, I didn't feel so alone. I felt like there was people there that were helping me. So that's something also that's great. The broker goes beyond getting your initial coverage. They'll also help you with any claims.
So I think we have one more slide in this section. If anyone has questions on this current topic, feel free to share verbally or in the chat.
This session,
Yeah.
so
Yes. Thank you everyone for hanging in there. Thank you, Grayson, Jenna, Sid, Michael. I have learned a lot personally, and I will and you guys have already touched on most of the things I plan to talk about, but I will just talk about some things that you haven't touched on, which is basically determining your goals and your next steps. So really, conceptualizing your business, it's very important that you have a business plan, and that's really going to help you to determine your goals and also set your objectives. That way you can measure your progress over the years. And really, it's important that you set SMART goals, and that will help you to ask major questions as to what you're doing and why you're doing what you're doing. You want to ask yourself, where you see your business in the next 5 years. Are your business really meeting emerging customer needs? I mean, is your business right for today's market? So those are the questions you will ask yourself when you're planning your business, when you're setting or planning your business goals and your objectives. And really, we almost already know what SMART means. It's an acronym, and S stands for being specific. M is measurable, which means you set measurable goals and things that you can quantify, especially in dollars. That way you can see your progress over time. A is being able to be action oriented in terms of setting goals that are feasible and things that you can actually be able to be accountable for. And R is being realistic. Although you want your goal to be realistic, but you also want your goal to be challenging as well. That way you can see progress over time. And also it's important to set deadlines, and that's being timely. And all these things really help you to meet your long-term goals and help your business to grow, and also see what you need to be able to be progressive in terms of making your business funded, as well as getting the and as well as being able to tackle any challenges that you might encounter while you are as an entrepreneur. So I will move on to talk about business plan and how it's important that you look at your objectives downwards. It's just about you setting your goal and also breaking your goal or your objectives into tiny things that you can accomplish, maybe in weeks or in months. And that way you can see how progressive you are. And it's also important that even while you're setting those tasks, it's going to be less stressful and to be easily manageable, because you've broken down your goals and your objectives into tiny and achievable tasks. And also it also makes your goals and your objectives really achievable when you break your goals into tiny tasks. So why is it important to work backwards? It's important to work backwards because breaking your goals into smaller pieces helps you to tackle things timely. Even though sometimes when we're about to start some business or your business, you might not have all the information that you need at that particular period of time. But once you break it down and also look at it backwards, you can be able to tackle and gain milestones over time, over weeks or days or months. And that way you can see how you're progressing over time. And part of what I want to talk about is the PDCA, which is a plan, do, check, and act, which is a 30, 60, and 90-day goals that you can set for yourself. And really, this is just an iterative four-stage process that can be adopted to gain like processes or products or services, and to resolve any problem you have as an entrepreneur or while you're running your business. And for plan, it's really about you identifying the problem you're about to solve, and also gather all the data that you need, all the information that you need that can be useful for you in order to set yourself to have a successful business. And for do, it's about developing and implementing solutions for any challenges that you might envisage, or any challenges that can occur while you are running your business. And really, it's important to develop that plan or develop a solution that can help you. That way you can like gauge the effectiveness of your results and also measure your results. For check, you are checking the results as well, and also comparing it with the results you've gathered or you've had for similar problems, and see which method was more effective, or which method you would like to adopt just in case such problem arises in the future. And for act, it's just about like documenting your results, and also because sometimes some situations might arise again while you're running your business, but having all this documented, you can go back and see, oh, this is what I tried the last time. I might adopt that for this particular problem in my business. I know we talked about.
To add a small note here that PDCA is a very simple but yet very effective tool, which I think every large organization uses. It doesn't matter if you're small or big. You talk about large manufacturing companies or retail companies. Everybody uses this very simple fundamental tool called PDCA at every point of time to analyze where they are. So if you think that this thing of constantly monitoring yourself is being taught or being told to you just because it just does not apply to entrepreneurs. It applies to even once you become a large organization, which I want you to become at one day. But this is one of those fundamental nerves organizations don't lose or relax, even if they become billion-dollar organizations. And the 30, 60, 90 is something that you keep doing. The PDCA cycle, you have to do it for 30 days, You also have to do it for 60 days, and you also have to do it for 90 days. So you have to have different cycles. What you would plan, do, and analyze and act upon. And it's like a continuous improvement cycle. It starts small, then becomes big and bigger, like that. So this is something I would say, if you have to not done that, you should really read about it and learn about it and try to imbibe it in your day-to-day life. It's a very, very effective tool which makes big organizations big.
Thank you, Sid, for chiming in. So I'm going to talk a little bit about controls and how we can safeguard our assets. So this is really just how to protect your assets and things that you can do to ensure that you have proper financial and operational controls in place. I know that Grayson and Jenna already touched on this, but really it's important that we emphasize that you have enough controls to be able to protect your businesses just in case something comes up in the future. And also it also helps you to minimize and protect like internal controls that might arise in the future. And moving on, I also talk about business credits. Grayson already touched on that. And I would just say again, just like you said, have a separate account for your personal credits and for your business credits. It's really important, just in case something happens to your business, it's not going to affect you personally. And if something happens to you, it's not going to affect your business. So it's important that you have separate accounts, speak with a financial advisor if that's going to help you, or speak to people who are also doing the kind of business that you have, just so you can have like a broader knowledge on how to carry out these things. And really, how do you build your business credit profile? That's also very important. And Grayson might have more information about it just because of experience. But I know to build a good credit profile, it's important that you pay back when you borrow. Paying is very important because it helps with your business credit, and paying back, it also helps you to establish a good business profile. Also, be visible. Make sure that all the suppliers that you worked on while you're running your business can attest or give a report about your payment history. That way, that can also make it comfortable for other companies or other creditors to do business with you. So it's important that you are visible and make sure that you can account for everything that you spent on for all your credits. Also, it's important to monitor your company's profile. There's so many fraudulent activities happening these days, and you want to make sure that you are getting alerts and making sure that no fraud is being penetrated using your business name. So that's also something you should have in mind to build a business credit, or to have a very good, to build your business credit. And I guess that's all I have. If you have any questions, I'm happy to take your questions.
Thank you.
Thank you. I just want to add some last few more words here. I think we've spoken a lot about financial literacy and accounting and how to plan for future. But one of the key things what I would like to stress upon here is also that is having a clear-cut mission and vision. If you go, a simple exercise you can do is look at all the biggest of organizations in your respective fields, and you have to analyze what makes them bigger, because that's what I think every entrepreneur wants to aspire to be, that I have to benchmark against myself. Sometimes it's the neighbor that I want to do business comparable to them, and sometimes internationally or nationally, you'll have to go and see what is their mission, what is driving them. And I think it's very important to have that articulated and written and shared within your own teammates, so that that should tell them, why are we coming to work every day and what are we intending to do. And we do that in EY too. And even many companies like EY have a specific mission and vision statement, like what do we want to do immediately or in the short term, and what do we want to do in the long term as an organization in the next 5 years or in the next 10 years. I think it's very, very important. I feel that if we have that personally, and even for organizations, that will be the North Pole for you. and would help you guide towards that. And of course, the financial literacy will help you to stay focused on those. That I think we are open for questions, answers. It can be related to both the sessions or anything else you feel we can help you with.
Thank you, Jasmine, for that input. And thank you so much to our Ernst & Young friends. This has been very helpful. If you still have questions, definitely put those in chat. Feel free to ask them or unmute your mic to ask. There are a couple of things that I just want to highlight that are happening in Corner to Corner that I would like to also, one of which I would like to also extend the invitation to Ernst & Young. But the first thing is that around this whole idea of raising capital, breaking even finding, starting to increase your income and revenue, I want to reiterate, I put it in the chat earlier, but I want to remind you that Corner to Corner does provide the Academy Invested micro loan, where you can borrow up to $1,000 at a 1% interest rate. You pay it back, 1% interest rate, you pay it back over the course of 12 months, which is like a long time for a small loan, but also you are paired with a financial mentor. So you're getting more of that financial literacy piece. You're getting more in the moment help and mentorship on how to ensure that you have a financially strong business and company. So if you're interested in that, definitely let myself know. You can email me. I'd love to talk to you more about that. And today was so helpful and important for many reasons. But one, because when we're going through the application process for Academy Invested, we want to make sure that your business plan is solid, that it is strong, that we can trust you. To Grayson's point, that you're selling trust before we're able to approve you for the loan? And I say we, but it's no one on staff who's making those decisions, just so you know. And the other thing that I want to talk about is our Academy graduation, which is happening on Tuesday, November 16th at Rocket Town in Nashville. Doors open at 5 p.m., but the event starts at 6 p.m. For our Ernst & Young friends, we would love to have you come out and attend, even if you just log in virtually or share that with your connects virtually. We'd love to have you there so you can witness over 100 entrepreneurs, or roughly 100 small businesses, graduate this 10-week course and officially launch their businesses. So it's a big block party. You want to come? Go ahead.
I was saying I'm on as well, so I wanted to co-sign that before. I don't know if you saw me log back on. But yes, I wanted to co-sign that. First of all, thank you, Yasmin, for all of your work on this. And thank you to our presenters today. At Corner to Corner, we are always about trying to have lots of different voices speaking to our entrepreneurs. So we are so grateful for you being able to support today. And everybody who's watching on Facebook Live now, we get a lot of people who watch the replays. So if you're watching the replay, I would be at work. We hope you had a good day at work. And we're grateful that you're watching this whenever you have a chance. So yeah, as Jasmine was saying, on November the 16th, we have a free party, family-friendly party. So if you guys, Jasmine will send it to you all to send out to your organization, tell them what a great volunteer day you had, and then invite them to some follow-up. Our entrepreneurs, about 100 entrepreneurs, are graduating on November the 16th. It is not gonna be a boring graduation, right? We're gonna have a DJ, food, so we're feeding you dinner. It's family friendly. We're gonna have music. We're gonna be able to have a pitch contest. They're winning thousands of dollars in cash and prizes, and they all get celebrated for all the hard work that they do and the things that they're learning, like what you all were talking about. So please, please, please share it with anybody. It's open to everyone. Share with anybody. Invite them to come to Rocket Town on the 16th. Doors open at 5 p.m. And we would love for you to share across your networks. If you're watching alumni, you should be getting emails from Yasmin and Jaren about the graduation. Please sign up to come. We got some special surprises for our alumni specifically. And if you're already enrolled in the class, I see some people on who are currently enrolled in class, and we appreciate you for joining. Make sure you share it with your family and your friends. Guys, we only do these twice a year because we put so much time, energy, and money into it. So we would love for you to come and support and help us celebrate our entrepreneurs. Again, thank you to Yasmin and our EY friends for the hard work, because this information, as you all know from going through the academy, is so important, but it's not easy. It's not thrown together. This was thought through in a way that we really appreciate your time and energy. And so with that, oh, and I'm Shayna. I'm the executive director of Corner to Corner. I don't know if I've ever actually introduced myself. I was kind of a passing ship in the night. So pleased to meet you. And we've been taking notes over here and chatting about some things that we've learned as well. So we're grateful for your time today. Yasmin, back to you, friend.
Thanks so much. I also just want to acknowledge Caitlin, who is the one who initiated and put this all together. So thank you, Caitlin. And I don't have anything else to say unless our Ernst & Young friends have something you want to share, or if any of our entrepreneurs have some questions, thoughts, comments, promotions, whatever.
Well, thank you for inviting us. We've enjoyed sharing our experiences with you and enjoying learning about Corner to Corner. And I hope this is a connection that continues.
Thank you, us too. And with that said, y'all, that's it. Thanks so much. Let us know if you have any questions along the way. We're always here to help and support. We love our Corner to Corner family, and see y'all at graduation. Bye, y'all.
Thank you, Yasmin and Caitlin and Corner to Corner and the rest of you. Thank you. Have a great day and a great weekend.
You too, Sid. Thanks.